What's going on, guys? Good morning. Welcome into another pre-market video here that I'm putting out for you guys. Really simple updates today, and just on the portfolio front as well as just general positioning. Let's get into the macro really quickly. So if you look at what we have in store for the next couple of weeks, it's really important to look ahead to see what the market is actually trying to price in and what the market's getting finicky about, or if the market is confident about. We need to know all those things. So Jolt's report came in. It was a little better than expected. Today, Wednesday, we have the ADP report that will come in. I think it might be out now already. And you'll have ISM services that will come out as well. This will give you more on the services sector. Tomorrow you'll have initial jobless claims, and then you'll have unemployment rate and non-farm payroll on Friday. These two events are likely to move the market. Next week you'll have CPI on Wednesday and then PPI on Thursday, and that will be the two important events that will happen for next week. The week after you'll have GDP Q3. That's going to be an important one. And then the PCE inflation as well will be released next Friday. Apart from that, you don't really have much of a big event. On Wednesday, though, will be the biggest event of the week, which is the FOMC rate decision. So I fully expect that by Friday this week, we'll start pricing in some of the FOMC coming up. Now, if we just go into our trusty little bot here and pull up the federal rate expectations, you'll see that the market is currently pricing in a 75% chance of a rate hold or a rate. Wait, is this a rate cut or a rate hold? So you can see that the federal funds rate is currently at 4.64. So therefore, the market is pricing in a 75% chance of another rate cut. Now, if for some reason between this week and next week, this changes, then you're going to see the market correct downward in terms of expectation. But right now, they're expecting a rate cut in December, and then in January, it's expected to be a hold in the rate cuts. Beyond January, the market hasn't priced in anything yet. So if anything gets forecasted here, that's going to affect the near-term forecasting. And so that's going to be the main thing to focus on in the next 1 to 2 weeks. Okay. Now, on the just overall, structure, tactical sentiment side, you can see that we are approaching kind of a topish momentum. Okay, obviously there's still room to go into the red, right? As well as the short-term composite indicator is kind of turned the other way here. None of these mean that the market's gonna pull back immediately, or you're gonna get a flash crash. It's not that way. It's just about being cautious and taking calculated risks when the opportunity presents itself. So that goes into the analysis into SPX here, where I think it's important to mention that of course SPX is broken out of the all-time high, came back down, validated new support kind of in this area here, and now is getting up into my year-end target of 61.11. Okay, after which, if we do break that, then we will get into 61.59 and then 62.36, which is way up here. Okay, so that's going to be the short-term upside target. If we get some kind of a volatility event, then the immediate levels for support are going to be around 6,000. Okay, 6,000 all the way to 6,050 or so. This area here will become the interim support, which is now, after this moves up, this will change into a potential support. Okay, the next resistance is going to be up here. And so I'll draw that box in a little later. Now let's look at the NASDAQ, because the NASDAQ is the one that is fueling this rally after being lagging for the past couple of weeks. Okay. And you can see that SPX broken into all-time highs multiple times compared to NASDAQ, right? It broke out here, came back, broke out again, came back, broke out again, right? But the NASDAQ has not been able to really break out of the all-time highs, but finally did this week, and therefore is heading up into the 23.6 extension here at 21,638, where we are expecting a reversal. Now, obviously, we can't time this perfectly because we do not know where we're going to exactly get, rejected here. So I've preemptively taken a short position in the NASDAQ, but I did it through the proxy on QQQ. And this was the initial setup that I was looking for in terms of risk to reward. But I have sized the position to 0, which means I don't mind losing all of it. And yesterday it broke out of my risk. Okay. But because I've sized it to 0, I don't really need to bother about it, because I can let it literally expire if worthless, because it's just a hedge, right? And it's 1% of my portfolio. I don't need to really stress about it that much. If 1% gets lost, it's whatever, right? I can make that 1% back anytime. So I took a small hedge position, posted in the Discord already. If NASDAQ, pulls back, or we see some kind of anxiety from the market, then I'll be positioned to take advantage of that. Okay. So that's your update on SPX and NASDAQ. IWM here, broken out, coming back. It needs to find support in this area in order for more upside. So there will be more developments on this in the next couple of days. You can see it's pulling back a little bit here, and if it finds support here, then it can run higher still, right? Especially with more rate cuts on the way, that's going to just improve this landscape for IWM. In terms of the 10-year yield, you can see after this initial wave down, we're getting a pullback here. This pullback up will obviously cause downward pressure on the S&P 500. The dollar also pulling back a little bit. And, if it breaks above 106.77 or so, then, it might go higher to try and make a little higher low here. Okay. The VIX still moving down, but we've been seeing increased VIX betting activity in the past couple of weeks. So people are taking exposure to the upside here. It's just in the background. And if you follow along with the semiconductor play that I spoke about during the Sunday webinar, you'll see that off that, demand that was here, we have gone up quite nicely. Okay. Now, the portfolio is sitting at very close to 100,000 now. And obviously all these positions are doing great. Even this Amazon position is going to open up nicely today, probably around 30-40%. But this QQQ position will be down about 30-40%, which will be in a drawdown, which I don't really mind. Okay, that's not really a problem, right? Because that's the risk I'm expecting. Now let's also talk about uranium, which I've been telling you guys about for a while. There's more and more news coming out about uranium, being sought after, nuclear plants being talked about, So I do think, where this is now, it's a strategic spot where, our alert for a entry is here. And so, I think if it can hold and continue going to the upside, a break above $50 would really send this up into 54, which would be a nice little win. But this is my first entry here. And that's all I have for the macro front. But let's also look at some opportunities here. So as I was talking about Amazon, this one has been struggling a little bit, got sold off abruptly back to 195 roughly. And has bounced ever since then to 215. Now we're looking for that 61.8 extension at 222 before the next rejection, which means it has about a $5 upside or $4 upside. And remember, the fair valuation of this business is sitting at $230, right? So it's still undervalued by $15 or so. You have SoFi, which is also sitting at its resistance here. This is one of the stocks I'll be looking for potential pullback. Tesla, our darling Tesla, has been under a lot of fire in the past 2 weeks or so, 2 to 3 weeks. There's a lot of consolidation, lots of bulls and bears fighting in this area. Lots of attempts to break out of the 360 level, which has been holding massively. And if we can break out, right, if this goes like this, like this, like this, like this, and then boom, this is going to break out and get to 400 very, very quickly. So be aware of this. Tesla, once it moves, it's going to move very quickly. And having said that, You know, if of course it rejects 360, then don't be aware that, you know, there's always the opportunity to wait for a break above 360 and then bounce on 360 before playing the upside. So wait for that and then you play the upside, right? In terms of Apple, as I mentioned during Sunday's webinar, this was a top watch and part of our snipe list for this week. This breakout here in price discovery and all-time highs, you know, needs to be met with the pullback first before we can take out some of these Fibonacci extensions. But Apple is notorious for running hot when it is in all-time highs. Okay, so just be aware of that. Now, another setup that is quite appealing to me here is Square. And you can see that this area now has fulfilled its requirements as acting as a potential demand. So this is now going to turn into a demand zone very soon. And you can see the stock is actually bouncing and reacting to this demand zone pretty nicely. If it can hold above it for the next couple of sessions, I will be inclined to take a further upside positioning because I want to see demand building, sellers step in, buyers defending that, then further confirmation that I can actually enter long here. With AMD, oh boy, this one was a bit of a hot mess for me to deal with the past couple of weeks. I took a short position, it decided to go long. I took a long position, it decided to go short and stop me out. I've been very unlucky trading this in the past 1 to 2 weeks, and that's fine. It's gonna, you know, that's gonna happen to you sometimes. But as long as you don't lose your shit and blow up your account, you're going to be good, right? Always try to cut your losses quick. I took, you know, 20-30% losses. So, 30%, 40% losses. And the account is currently negative $50, you know, as the 5K challenge that we were talking about. Which, you know, all in all, doesn't really matter that much, $50, whatever, right? We're break even, that's all. But the setups that we've been taking have been good setups with good risk reward ratios that just haven't been playing out the way we wanted them to. And that's okay, right? It's going to happen. You just have to be strong, right? NVIDIA is the other one, bounced very nicely. So if you look at semiconductors, the way it bounced, and then you look at NVIDIA here, also bounced very nicely. Looks like it wants to go back up into the 150 level. So I might be entering a long position here. And that's all I have for you guys today. I have some other setups I'll post on the Discord. And also China looks like it's ready to go as well. So if you have any questions, comments, put it in the, you know, the chat below. And yeah, I'll see you on the next video. Peace. Bye.